Hi everyone, Drini here, and welcome to my channel. Let's hope the audio is okay this time. So we're going to take a look at the Star Atlas tokens today, POLIS and ATLAS. Because given that Bitcoin and the rest of the crypto markets are really weak, and the rest of the global asset classes are also very weak, we need to constantly revisit the charts and constantly revise our plan moving forward. And let's dive in. So let's start with POLIS first. So in our last video, we did establish for POLIS that we have risk thresholds that we have to account for when investing in a bear market. That means if price continues to be below the $3.05 range, then you continue to DCA accordingly. Or if you want to be more aggressive with that particular project, then you have a higher risk threshold based on what we see in the charts. In this case, we did identify that for POLIS, a $4.23 range would also be an aggressive risk threshold because this is where we found support a little bit before our continued downtrend. Now, we do have to revisit our risk threshold strategy. That is because this type of strategy is only good when we know we have a turnaround that's imminent. Unfortunately, the reality of the market is any small Bitcoin capitulation or any small Bitcoin price action to the downside now has a very magnified effect on any altcoins. This is typically an indication that retail has really lost confidence and any small sensitivity in the market is exploited to continue to dump or short the market. So what we don't want to happen here is we don't want to just keep revising it down like this, for example, where you're DCAing down. But there comes a point where being stuck in the middle, let's say this is the bottom, being stuck in the middle is actually more detrimental for you as an investor than just actually waiting for a major capitulation or waiting for certainty to the upside. So for POLIS and ATLAS, we appear to be in that situation where because it really looks like Bitcoin and the rest of the crypto markets are really weak, we have to modify our risk thresholds moving forward. What does that mean? We need to look historically at what altcoins are doing during previous bear markets just to see how far we can actually go. So we actually already explored that in previous videos. So we know that from the all-time high, for example, it is very much possible for price to really have drawdowns as much as 95 to 99%. So a 95% range for POLIS would be at the 78 cents, and 99% drawdown from the all-time high for POLIS would be at 19 cents. Right now, where are we? We are at 90%. So one important thing to note here before I continue, when you start going into the 90s, if you notice, there are multiples involved. So for example, 90% is currently at 188, but a 99% drawdown, even though it looks like it's just 10% from below the all-time high, is actually multiples lower. So what could be a good plan moving forward? If you have been buying POLIS ever since it was here, so let's say this is the average price for POLIS right here, and you weren't buying the run-ups. So let's say your average price was around here, of around $7.29. What we can do here then, and this is personally a strategy that I will be employing myself, is I will be looking at Bitcoin, and because we already have a point of view for Bitcoin as to where it could potentially go, so right now the point of view is at $29,000. This could be the potential low because of this particular impulsive wave to the downside, that we may breach these levels, hopefully before our subsequent continuation to the upside. When Bitcoin reaches this price level, this is where we have to take a look at where POLIS is at that time. Because we don't know at this point how low we can go, and because if you look at the current structure, we just appear to be in a free fall without any hope of recovery so far. So the thing to note here is at 29k Bitcoin, for example, where will POLIS be? Wherever POLIS is, then that is the entry point that you can establish before seeing what happens next. So if your average price was around $7.29, this is where you really have to accumulate a cash position so that once Bitcoin hits particular lows, or once you see capitulation candles, so that would be very large candles to the downside, take a look at where POLIS is, and that would be entry point number 1. So let's say in entry number 1, it was around 78 cents. This is much better than continuously DCAing right here. Because what happens here is you are placing equal weight with each DCA for POLIS. The problem with that is when we reach certain levels, like from 90 all the way to 99, the multiples really become higher. So it is actually much more prudent to abandon a DCA strategy for now because you will be caught up in the middle of bad price action. And by the time we reach certain lows, you will no longer be ready to invest in multiples that can really slingshot your portfolio value once we pick up from here. So once entry number 1 is achieved, then anything lower, because you know that let's say this is your average price right here, you did not invest here, anything below here then would really impact your average price because you're dealing with extreme lows and extreme highs. That is what's going to make your portfolio value or your average price really come down significantly fairly quickly, and hopefully from there we bounce back up. So for Atlas, it would be the same strategy. So right now for Atlas, we are at 87% drawdowns right here. We need to realistically assume that we may potentially fall 95 to 99%. That means Atlas, at the worst case scenario, can fall all the way down to 0.002 before the subsequent move to the upside. It's the same strategy then. To wait for a cap candle or wait for Bitcoin to really break lows, like for example 29K for example, or below 30K. And let's see where we are, because that's when we can establish entry point number 1, and then after that you have a DCA strategy accordingly. Now, there is one more strategy that we can do with Star Atlas, and that is what I call NFT sniping. What do I mean by that? So we know that crypto is very prone to capitulation candles, meaning these are giant ass candles that happen in a very short amount of time, and with that short capitulation candle, you can accumulate a lot of tokens immediately, assuming that, of course, you are paying attention and you are acting on it effectively because you have a cash position knowing that we are in a state where the market is really, really weak. When a capitulation event like this happens, if you've been wanting to accumulate ships and you don't care so much about the tokens, one thing that you can do is take advantage of the fact that the ship is priced with the token. So what will potentially happen here is when we have a capitulation event, so let's say Atlas falls down significantly by 50% within a particular day. So let's say from here till here, it falls down to 0.01. The listed price in Atlas will not change as quickly for most people. So what you can potentially do here is when a capitulation candle happens, this is where you buy as much Atlas as you can. So once it hits that particular capitulation candle, you buy as much of the token as you can, immediately go to the marketplace and convert that into an NFT. Because you can imagine, if you have a capitulation candle that falls 50%, for example, you can expect that this ship price is suddenly 50% off. That's just one tip, not just from a trading perspective, but also from an investment standpoint, how you can take advantage of things priced in local currency instead of USD. If you like that video, hit like and subscribe, hit the notification bell. Also, let me know what you think in the comments. Do you want me to make a video about your favorite gaming crypto? Be a Patreon subscriber so you can request for it. Being a Patreon subscriber helps keep the channel sponsor, shill, and Moonboy free. Take care everyone. Bye-bye.